Well, the NASDAQ reached a new record high during yesterday's trading session. Let's bring in Michelle Schneider. She's with Market Gauge, here to talk more about the market action. Hello to you, and what can you tell us?
Well, it's a very interesting market, as you say, and we've been, full on risk on for the last couple of weeks. Much of the buying going into tech, although I think the tech has started to get a little bit of dose of reality here in that although tech has definitely become more prominent in our culture, given our stay-at-home type of situation we're in, at the same time as how much consumer spending is really going into tech in terms of gadgets and things. And then in return, we saw a rotation into small caps, which we talked about for the last several weeks. So now we have a whole new week, and we have a couple of interesting things. Number one is the Robinhood traders have been all over Twitter, because apparently there have been people who have never traded before in their lives, opened up Robinhood accounts, and just bought. And so these are people who have absolutely no idea about risk management, position sizing, or that the market can humble you really fast. So that's just want to put that out there, because what they've bought not only is the small caps, but they bought a lot of undervalued stocks. Also, the financials played a big catch up because the yields dropped last week. And we have a Fed meeting this week. So we're now in a situation right here where tech is taking a pause. The Russell 2000 and the small caps have still managed to do well, outperforming. And the regional banks and the financials are holding, but they haven't cleared a major overhead moving average, which means this still for them looks like a dead cat bounce.
What are you expecting from the Fed?
Well, they're really in kind of a pickle right here, because if people are really exuberant about a V-shaped recovery, which Morgan Stanley came out today, and I'm still extremely suspect about, because we weren't even in a strong recovery before the virus. The GDP was limping around. I think that the Fed doesn't want to raise rates right here, even though the yields have risen. But on the other hand, they know that going negative is not such a great option. So they're going to have to stay the course, is what I'm guessing. And that's why we've been watching the bonds very carefully, which started to bounce. And I mentioned risk on. I think we're going to head maybe more into a risk off environment this week. We've got the bonds bouncing, the TLTs, that is the 30 years. We've got the volatility index bouncing. We've got the gold, the silver, and the gold miners holding and trying to bounce. These are the ones that show warning. So if the Fed decides to reduce their buyback program, maybe that would be a sort of an avalanche for the market. And since considering you have so much of the liquidity in the market now, these brand new traders who have absolutely no idea what volatility looks like, this could wind up being a very interesting week. I'm actually starting to build more positions on the risk off than the risk on. We're enjoying our longs so far, but we're starting to look at taking some profits.
Thank you as always for your Trader Talk, Michelle.
Thank you for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.